Welcome back to Reimagine 2020. I'm Yonah Hochhauser, and today I'm glad to be joined by Dan Held, growth lead at Kraken. Dan, thanks so much for joining us.
Good to see you again, Yonah.
Well, for those of our viewers who aren't familiar with who you are and your work, you want to give a little background about who you are and kind of how you got into crypto?
Yeah, so I've been in the crypto space for since 2013. January 2013 is when I moved out to San Francisco. Got involved in the early meetup, and back in that day, there was only a dozen people with like Jesse Powell, Brian Armstrong, Charlie Lee, Jed McCaleb. So really to kind of tight-knit group. Now, I had heard about Bitcoin and bought Bitcoin before that, back in 2011, 2012. It's when I first heard about it through a buddy, bought my first coins on Mt. Gox. Definitely didn't buy as many as I wanted to. I think that's always the regret of every OG. But yeah, so once, moved out to San Francisco for a job relocation, got involved in the Bitcoin community. And then when the March 2013 price run up happened, because people forget there was two bubbles in 2013, that's when I felt compelled to build my first product called Zero Block. Zero Block was a real-time market data and newsfeed aggregator for mobile. So the Blockfolio equivalent in terms of functionality and popularity. We were the most popular mobile app in crypto back in 2013, and we were acquired by blockchain.com. I came on board blockchain.com as director of product, was there for a year, went to ChangeTip, which did micropayments over social media using Bitcoin, then went to go work at Uber, where I was on writer growth and growth marketing. Left there, came back to the crypto space, co-founded Interchange, and Interchange got acquired by Kraken. So I've worked at 5 crypto companies, sold 2, and now at Kraken, I'm the growth lead. So I look at how we can efficiently acquire customers and get them through the website, app store, and then through our onboarding flow as efficiently as possible.
And like you mentioned, you also worked at growth at Uber, and you've had your fair share of growth, both in traditional tech as well as in blockchain and crypto-focused companies. Now working at Kraken and overall as growth in a cryptocurrency company, what's the biggest challenge or difference when it comes to trying to get growth at a crypto exchange as compared to a regular traditional tech company like Uber?
That's a great question. It's something that I like to bring up in conversation, typically amongst folks who are more growth-minded. So in Silicon Valley, what happens is when there's a hot rocket ship startup, everyone looks at it and they go, oh, that team must have done something magnificent for that growth. And 99.9% of the time, they're correct. Uber, Airbnb, Google, when they go ship product, when they go ship features and functionality, that functionality increases demand for the product. In crypto, that's not the case. In crypto, you wait for a bull run. The bull run is largely the organic upswelling of demand for your product. So growth teams typically are aligned with like this feedback loop of growth of acquiring users, efficiently getting them through to the aha, make magic moment, the moment they realize what the value of your product is, and then figure out different growth loops to pull in more and more users. It's a little bit different in crypto. Now, we still apply some of the same principles. We obviously look at it like a growth funnel, combined with a newer terminology, which is like growth loops. Growth loops are a little bit trickier, sort of a concept to apply to an exchange business. So some of the basic principles apply. Growth is about efficiently taking people who hear about your product, aka marketing, getting them to the website, efficiently converting them there, and getting them through all the way to that make magic moment or the aha moment in the product. That doesn't change too much regardless of the giant upswelling of organic demand, but it certainly changes the outcome to where, I might have generated XYZ improvement in that efficiency, but my numbers are insane when a bull run happens because you have this giant organic upswelling. So, and then also the intent of and this is what's really tricky for growth people. Let's say we're looking at the view to click rate. Someone lands on Kraken.com, they see the homepage, and we hopefully want that enough information to be on that page that they feel compelled to go sign up. Now, that conversion rate from a view to a sign up, that could increase without me doing anything, because when there's an organic upswelling, the intent to go create an account increases as well, because people have FOMO. So the FOMO element might distort our metrics too. So there's all sorts of methods that we think through how to normalize that. But yeah, these are the struggles of a crypto company versus a normal tech company, which Uber's demand for Uber didn't cycle in these giant 100x more demand for Uber, minus 90%, 100x minus 90. So it's really hard to build a crypto business in general. I think I would advise most people not to start one. It's honestly one of the hardest industries to build a business, because how do you plan employees and fundraising around these cycles? It's really tricky. But yeah, when it comes to growth, sometimes it's hard to distill our impact of what we've done versus the aggregate like upswelling of organic demand.
Mm-hmm. And like you mentioned, it is a unique industry when it comes to growth, because that demand does follow the price. Like we're seeing right now, Bitcoin's at 18K, it hit 18.5, and then everyone gets excited, everyone has FOMO. People who previously weren't interested in this product now are interested. And that drives a lot of demand, and I'm sure that brings a lot of people to the exchange, Kraken, that you work for. Now, if you're looking back, at 2017, the bubble, or even going back further, but let's just talk about 2017 for now, because that seems to have been the big mainstream, onslaught. How many of those users, how many of those mom and pops that were jumping on the FOMO, once the price went down, were they all like, "Oh, this doesn't interest me anymore," and they left, or was there actually a good portion that once they bought and then they looked into it and they said, "This is interesting," they actually stuck with it?
So I can't talk about Kraken's metrics directly, but I can talk in general about the space. Mm-hmm. So there's a term called higher lows, and that higher low dictates the higher low that the new bear run. So you've got the bull market and then you have the bear. The higher low represents the low watermark of that new cycle. So for example, Bitcoin hit a bottom of $200 in 2015, and then the lowest low in this last bear market was $3,000. So higher lows. Those higher lows are also a watermark that is seen inside products. So just because there's been a big decrease in demand, it's still much higher than the last bear market's low. So I think companies' metrics across the board, whether it be Kraken or other companies, are likely to see that, where maybe you had 1,000 daily active users of your price checker app in 2015, but now you've got 10,000. So, but then during the upswelling, you might see that increase to 100,000 or a million. So there's definitely an ebb and flow to it, but establishing those higher lows does give businesses some sort of minimum demand. There's a saying that I've come up with, which is come for the speculation and stay for the sound money. That's typically what happens. The price goes up, people get FOMO because they hear about Bitcoin from their friends, they buy it, then they learn about it. Then they go, okay, I bought this thing, well, what is it? In fact, I've actually applied this to my investing in the traditional world, where I spend a good amount of time researching before I buy any sort of equity, and I plan on having a 5 to 10 year hold. It's a very small percentage of my net worth. I'm stupidly at a very high amount in the Bitcoin. Some people externally view that stupid. I think it's pretty rational. But whenever you buy an asset, you start to pay attention to it. For years, I didn't even check the equities market. I didn't even check what was going on in the mainstream world. I just looked at the price of Bitcoin, which is good, but I was like, wait a second, I'm not really thinking about how Bitcoin's moving relative to everything else. And if I want to understand the bigger picture, I should really start to pay attention a little bit more. So I put a small amount of money into the traditional equities just to start paying attention. I did my research on what I picked, but the price is such a strong signal. It's a signal for demand. It's a signal for staying power. It's also this curious demand where now I've got a pattern set up where if you buy into Bitcoin for the first time for speculation, now you're checking the price. And it's sort of like your time gets reoriented around Bitcoin time. And that changes your mindset. You start to think more in Bitcoin. You start to think more in, it's kind of funny. I think a little bit in price time. Like when you talk about the year 2014 or 2013, I think what the Bitcoin price was first. And so, I think come for the speculation is fine. But then we see all these folks stick around for the sound money, and that's what creates the floors of these markets. Now, in this next bull run, I think we're at a really unique position because for the first time ever, you've got financial instruments like lending and borrowing where folks don't have to sell their Bitcoin. They can just earn interest off of it or borrow dollars against it and not have to sell. And that combined with the educational component, there's so much more content. There's video content, there's blogs, there's tons of podcasts, there's books. We didn't have that in 2015. So I think the bear market after this next bull run, I think that higher low might be much higher. I don't think we're going to see that 80% dip anymore, because you have institutions plus the retail plus educational content plus financial instruments to reduce selling pressure. I don't really think we're going to see a traditional cycle this time.
Mhm. Yeah, and I mean, of course, everyone's picked their interest because we're in that we're in that bull market right now. Bitcoin is making major gains very quickly. This is very similar to that cycle. We've seen this in the past. You know, you're a growth lead. It's funny. I would hate to be the in charge of the support team at Kraken now, because everyone who forgot that last used their password to log in 2017. Oh shit, Bitcoin's up again. What was my password again? You know, that's definitely for those people who are hopping in a FOMO. But when we talk about this idea of the Bitcoin price going up now, and a lot of people FOMOing in, as someone who's in charge of growth, how do you get over and how do you address the fear that some people have where they look, if you look at the chart, they say, whoa, Bitcoin's really, really high right now. Maybe now isn't the time to get in. If I look at it, it always historically drops. How do you get people past this fear that maybe we're at the top of where it's going to go, and I'm going to wait until it drops down again?
That's a really good question, which is how do we capture that intent and how do we convey the value prop of our product, but also mitigate concerns? Ultimately, any sort of landing page, whether that be an app store page or a web landing page, should convey enough information to mitigate the concerns of users. For example, they should understand at a very basic level what the product does. What value will this provide me? For Uber, let's get a ride. For Kraken, buy crypto, right? So when we think about, you first have to convey the basic value prop, and then if there are additional concerns, you can mitigate those through preemptively answering those questions. We can't make any sort of price predictions. On a personal level, I'm obviously incredibly bullish. I don't think you'll see a button on Kraken that's like, it for sure will be this price. We don't know where it's going to go. And to be clear, you know, I'd say a lot of the risk has been taken off the table, but there's still risk. And so when we look at how to mitigate concerns, you know, traditional conversion rate optimization principles, what you do is you start with like basic value props at the top of the page. You've got a sticky call to action. And so if the user doesn't find the immediate value props compelling, they scroll down the page, and further down the page, you can mitigate those concerns. For the price one, I'm not sure if we can address that one directly. Potentially through Kraken Intelligence data. Kraken Intelligence is our research team, and they put out content that talks about like Bitcoin as a sound money and other pieces of content. So potentially those, but I don't think I'm going to be able to convince someone that to hodl in 5 seconds. People have a very short attention span. I'm trying to convey the basic value props of Kraken, but we certainly hope, and we've built out a Learn Center for people to learn more about whatever they're purchasing. So I would hope that they would spend the time to go read over there, or maybe that's where they first get into Kraken. Maybe, you know, we hope that people search for what is Bitcoin, find our Learn Center page, and then come use the product. So hopefully, with those educational components, we can be a little bit more. We can enable our investors to better understand what they're buying.
Mm-hmm. And it is interesting because you did mention that, you know, the big difference between previous cycles and now is this availability of educational material, and people could learn and really educate themselves about what they're buying instead of just getting excited about a number. That's one difference. Another big difference that we're seeing with this latest cycle is the institutions, the amount of institutional players who are in the game. Grayscale Trust holds more than I think than 500,000 Bitcoin, over $10 billion in assets. We could debate if that's good or bad. Along with that, you know, you have publicly traded companies like MicroStrategy and Square putting cash reserves into Bitcoin. So I think it's fair to say that this time around, there's a lot more institutional players. How does that affect the cycle? Does that change the cycle? Are we going to see a totally, should we not, you know, are we going to, will history not repeat itself because that factor is big enough that it will totally change the future outcome?
History doesn't repeat itself, it rhymes. So I certainly think we'll see some rhyming happen. We'll see some, you know, we saw a little bit of a pullback last night of dropping like $1,000, which is funny. Oh no, it dropped from 18,500 to 17,500. You know, we're certainly going to see volatility. That's not going to go away. But with the institutions coming in, this bull run is very different. And that's where people are looking at it like these historical bull runs. And I'm like, it won't look like that. People are expecting alts to do X, Y, or Z. I don't know what they're going to do, but I certainly wouldn't rely on the past to tell me the future in this one. There's a lot different scenario. We've got like a huge macro event, COVID, that happened where money printer go burr went nuts, which highlights Bitcoin's use case, which is being recognized by these institutions, these legendary hedge fund guys. And these legendary hedge fund guys are buying Bitcoin because of its gold 2.0 thesis. You know, the other alts don't have that narrative. Like, that is Bitcoin's narrative, and Bitcoin's the most liquid, and Bitcoin's also the only one that they could take the career risk on. So, you know, in terms of how this changes, like, you might see Bitcoin have like a super cycle, is what I've called it. About a year ago, I came up with this term. This is a perfect storm for Bitcoin to be like, to become a gold 2.0. This isn't a typical cycle that's retail driven due to a halving event, which reduces supply, increase of demand. This is the world FOMOing into something safe. This is hundreds of trillions of dollars of institutional money FOMOing in to preserve wealth. Like, this isn't a typical mom and pop retail cycle. I think that dramatically changes it dramatically changes the amount of money that can flow in, which means it could be an incredibly strong bull run. I think it also, and these are institutions who have a little bit more analysis, and they have stronger hands, because this is like their money. It's not their pocket change that they put into Kraken and or Coinbase and went to go trade. This is like billions of dollars on behalf of pension funds. And they're not just going to like panic sell. You know, they're going to buy and they're going to hold it for a year or two or whenever. And so I think this cycle is going to be dramatically different in both the intensity of the bull run, which we've already gotten off to a crazy start. I don't think any of us expected us to rocket from 10,000 to 18,000 this quickly. But if that's any indication of what's going to happen in the future, I think we're in for a fun ride.
Yeah, I think you put it perfectly when you said it's this perfect storm, because for so long, you know, us Bitcoin, you know, earlier adopters, and this is still, even this 10 years on, this is still early in the grand scheme of things. We were saying for so long, you don't realize that with fiat money, the governments have so much control over them. And I don't think people realize what that meant, control. They assumed it was just the government's name stamped on the currency. But now what you're seeing with the money printer go burr, governments really have control of the supply. You know, when people you know, like, lose their shit when Tether prints 500 million more USDT, the U.S. government's printing trillions of dollars. And we were warning about this for so long, and people didn't really believe, or they didn't see it, they didn't understand. And I think now, like you said, with this perfect storm with COVID, the government's doing our work for us. We don't even have to advertise or push Bitcoin, because they're making the use case come true. So I do think you're exactly right there when it comes to the perfect storm. Another thing you mentioned, though, is that something interesting now is that there are options there if they want to put their Bitcoin to work. You know, before it was hold it. You know, believe in the currency and just hold it. And I think for some people, for some investors, that is a tough thing to wrap their heads around. They're impatient. They want to make 1000x. And now with DeFi, there are ways where you could maintain your Bitcoin exposure, you're long on Bitcoin, while still still being risky, still putting it at work. You could lend it out, you could wrap it, and all types of things. So what are your thoughts on DeFi and its effects, this newfound ability to both maintain exposure to the underlying asset while putting it to work? What are your thoughts on DeFi and its effects on Bitcoin long term?
Yeah, so you can put your Bitcoin to work in both DeFi and CeFi products. So on DeFi, that means, and for the folks who are watching this, I'll give a brief explainer. DeFi means it's decentralized finance, is what its nickname is, and CeFi is what you'd imagine as traditional finance. With DeFi, folks are taking Bitcoin and putting it into smart contracts. And to be clear, the process of getting Bitcoin into other systems like Ethereum by wrapping it is a risky maneuver. Either they're custodied by BitGo, which is a form of wrapped BTC on chain, which is a centralized custodian, or there are different smart contracts like TBTC, but that, for instance, broke the first week. I know that they've mitigated some of those issues. It's a risky business. DeFi is often touted as less risky than CeFi, traditional finance, but there's a lot of unknown risk. We've game theoretically constructed this DeFi program to work a certain way, but if it's exploited ever, we could lose all of our principal. So that I think is a risk. It's a known unknown. Don't know the 0-day exploits in my DeFi products, but I can pretty much assume there's going to be one. I just don't know when, and how catastrophic it might be. So DeFi and CeFi both lock up coins, and that reduces the amount of coins being sold. At least that's the narrative, right? On the CeFi side, which I'm a little bit more knowledgeable about, you can take your Bitcoin and you can lend it to companies like Ledin, Ledin, BlockFi, Genesis Lending. It's called Genesis Capital. These are the three venues that I've lent my coins out on. Which I'm actually about to publish a Google Sheet that will transparently show people where I've lent out my coins. I view it as a really fun exercise for an old hodler like me. Put my coins to work. If you want to join, there's a link to join. And also, if I'm wrong, I lose my own principal. So I only recommend products that I personally put my money into. And this isn't like I invested in the company. I'm a customer and I have no preferential rights. So I'm an everyday customer like everyone else. But yeah, with the CeFi side that I'm a little bit more knowledgeable about, and I've borrowed against my Bitcoin using it as collateral, I think this dramatically reduces the selling pressure. So let's say I have a very large appreciation. This is all hypothetical. I'm just saying, let's say I have $100,000 in Bitcoin, or let's make it $1 million for fun. So I've got $1 million worth of Bitcoin, and I don't want to sell it because I still believe we're still going to the moon. Bitcoin's at $100,000 per coin. So this is 10 coins. I could take that and borrow $200,000 in dollars and go put a down payment on a home. That would be a really cool way to maintain my exposure to Bitcoin, but without having to sell it. Conversely, I could take it and lend it out. And at current interest rates, that's 5 to 6%. You could make $50,000 to $60,000 a year. So both of those, I think, reduce the selling pressure of Bitcoin, which is really cool, because I think that totally changed the dynamic before. Whenever you wanted to take gains before in Bitcoin, you had to sell Bitcoin. That was the only way to do it. But now you're like, well, what if I never want to sell and I just continually borrow for the rest of my life from my Bitcoin stash, or you lend it out and never have to touch it. So I don't think there's a right or wrong way to do it. Each one has its own risks. Everyone should read up on before you do either strategy. But I think it's an exciting new world for the space.
And that's another point of the perfect storm when we're talking about not just the inflation and the money printing, but right now with interest rates, traditional interest rates being nothing or negative, that's really opened the door, I think, for DeFi, CeFi, or any of these new lending products that are, they're offering either 5% up to 200% APY. Obviously, the higher you go, the vastly more risky the bet. But I really wonder if we weren't in this very, very low interest rate scenario in the regular traditional world, I wonder if we would have seen this taking off of this crypto lending products, because they are more risky. But I do think that people are willing to take a little more risk now, because what's the alternative? If you're keeping even if you believe in the US dollar, the staying power of the US dollar, if it's in your bank account, you're getting nothing for it. So how much of an effect do you think that has had, that this low interest rate reality that we're living in? How much effect do you think that has had on the growth of crypto lending?
Yeah, there's certainly a Bitcoin black hole that occurs here, where Bitcoin, due to its attractiveness in both price appreciation, but also the yield you can earn lending it out, pulls in folks from all these other asset classes where you're earning shit interest for a lot of risk. It's funny, like I've got a bunch of friends who work in the private wealth management space, and none of them know what's going on. They're like, we don't know where to put money anymore. Like which is kind of wild. I mean, that's a pretty weird world where they're like, yeah, nothing is priced appropriately. Like the central banks have cattle prodded everyone into riskier and riskier investments through quantitative easing. And so the prices have been so distorted that there's not really a good way to find signal. With Bitcoin, yeah, like a 5% 5% return on your Bitcoin is a phenomenal return, I think. There's of course other ways to do it too, and there's risky, less risky, more risky, but it's I think what's crazy about a negative interest rate environment is that those models that these central banks built out didn't equate for Bitcoin. you can't stop Bitcoin. That was actually the topic of my latest newsletter. Can governments kill Bitcoin? And you can't stop capital from flowing into like the negative interest rates are penalizing people for holding money. Like it's going to be a gigantic flow into Bitcoin. It's insane. I think that like up until this moment, now they're starting to wake up, but like up until this moment, everyone thought Bitcoin was a joke. And then they're all finally waking up to like, no, this is real. This is the solution to the problem that you created. So people will choose it. So yeah, there's this sort of like this black hole that Bitcoin is pulling all these other assets into.
And I think there's also this tipping point, this public tipping point, where you mentioned that people were so long thinking of Bitcoin as a joke, and then slowly but surely, as bigger and bigger names start coming out and say, "Hey, I use Bitcoin." Now, Twitter CEO Jack Dorsey has for a long time been public about it. Michael Saylor, who the CEO of MicroStrategy, obviously now a public proponent of Bitcoin, and then in a reply, I think it was 2 days ago, in a reply to your own tweet about institutions coming in, Mexico's third richest person disclosed that 10% of his liquid net worth is in Bitcoin, and also he's a big fan of your newsletter. Which piece of that news excited you more? The fact that he's 10% into Bitcoin, or that he likes your newsletter?
Definitely 10% into Bitcoin. I think that's the important piece here. Granted, I was a little embarrassed because I had misquoted him because I don't speak Spanish, and so I retweeted his tweet and I missed the liquid net portion part. So the start of his tweet was he nodded and said he liked the newsletter, and then he corrected me. So I was a little bit humbled. But yeah, I think it's phenomenal news to see guys like him come in. I think we're going to see a tidal wave of this happen. I mean, we're just at the start of a bull run. These individuals are de-risking the career risk. So before, if you said if you're a hedge fund manager and you said, "Hey, we should buy Bitcoin with our fund," people would think you're insane. But now these really big brand names have come out and said, "We believe in Bitcoin." Well, now you can go, and the investment committee looks at the next investments you all should make, and you point to them and you're like, "Look, these guys are legends. We'd be crazy not to put in 1%.
Yeah, and I think it was last year or 2 years ago. There was a pension fund. The first big pension fund went in with the Morgan Creek Capital. It was some cop pension fund in Philadelphia or Boston. But I'm assuming we're going to see more and more of that, and that flow in. And then with that, hopefully comes more stability. Like you mentioned earlier on that the risk isn't all removed. There still is risk, but a lot of the risk is removed. That we're kind of at this point where, quote unquote, too big to fail, which is a phrase I don't really love, but I mean there is truth. It's such a big market. There's so much money, and there's so much smart money here that you mentioned. There's no real stopping it. I mean, governments could they only really could attack the on ramps and off ramps.
Totally. Yeah, it's it's sorry to go back to the newsletter topic that went out an hour ago, which is, can governments kill Bitcoin? Bitcoin's at a stage where, yeah, you're right. It's been lucky because people haven't considered it seriously. But by the time they do, it'll be too big, too liquid, and too ingrained in the financial system to really kill it. The way that Bitcoin wins is through adoption. That's the only way. Through adoption, what occurs is the security model of Bitcoin's block reward that increases. Block reward is comprised of newly minted coins plus transaction fees. The value of both of those inside the block reward rise during a bull run. That is what we pay the miners to behave properly, to organize transactions accordingly. That's the game theory that backs Bitcoin. So we've got that, which will rise to tens of billions or hundreds of billions in annual spend, which makes it very, very anti-fragile. And then two, which I think is actually the more important part, is that a percentage of the population will own it, a larger percentage. So in this next bull run, we could see 20 to 30% of like European and the European countries, maybe Asia and the US, own Bitcoin. If that occurs, it would be extremely unpopular for a politician to ban it, because politicians are motivated by getting elected. And if their constituents own Bitcoin to a certain large extent, they know that an anti-Bitcoin platform would ensure their downfall. So that protects Bitcoin as well, I think, in this next bull run from governments. And governments will realize that at the very last moment. They're very slow. They don't think proactively. They've treated Bitcoin as a joke this whole time. Similarly, governments can't. If they attack Bitcoin, they lose. It's a game of flinch. Like if you flinch, you lose. And the reason why is faith is all that's required to make it work. Bitcoin, like the US dollar, is completely backed by faith and trust, which central banks have none of that. And if that starts to erode, if they look at Bitcoin and say, we're scared of that, everyone else goes, wait a second, I thought you were like the god of the financial system. Like we thought you had everything under control. If they start to signal through banning Bitcoin that they are scared of it, that increases awareness of Bitcoin and also makes people start to question the nature of the reality and go, wait a second, my government's scared of this, then maybe it should be my ally. It's the enemy is my friend. So governments are in an impossible position. If you don't ban it, it eventually will win. If you do try to ban it, you could get voted out of office. Plus, you've now hastened the downfall and trust of your own currency.
Mm-hmm. Yeah, and it is interesting because we're speaking about governments' reactions to Bitcoin and cryptocurrencies. President Trump, who overall took kind of an anti-regulation stance on the financial system overall, it seems like he was not so much a fan of Bitcoin. He tweeted about it a couple of times, being against it. And then his administration, especially in recent months, seems to have been taking a bunch of moves against crypto projects, whether it be the SEC going after ICO legal security offerings that were happening from the ICO boom, or just even the heads of BitMEX, who were being chased for money laundering and KYC issues. Do you think with the incoming presidency of Joe Biden, do you think that will have changed the U.S. government's stance on crypto, either more negative or more positive?
Yeah, that's a really good question. I think that's what we're all wondering here in the U.S. as we kind of patiently wait and hope that the changes that come aren't terrible. Biden has signaled, I think, very pro-technological. I think he's looked at, I forget the individual's name, but he's looked at like appointing someone who is somewhat pro-Bitcoin. So I think that's a good signal. Biden himself is too old and senile to really understand what this all means. Most presidents aren't exactly super intelligent. They're just good politicians. They don't understand complex nuances of medical technology, Bitcoin, or anything else, right? They're not experts on everything. So they rely on a cabinet of folks that inform them and inform their opinion. So I think that Biden so far has signaled to be more positive around Bitcoin. TBD on if that actually gets manifested into anything positive. I think that Biden's natural inclination is to be negative towards Bitcoin. With COVID stuff, he's very much signaled more authoritarian takes on how he would approach COVID in the United States. I've got a feeling if a certain few people whispered in his ear, he would probably take the same stance on Bitcoin. So he's very he's not pro-business. I wouldn't say he's anti-business, but he's certainly not pro-business. Bitcoin is very free markets pro-business. So I think anything in that vein would probably be bad for Bitcoin. Now, has Trump made a concentrated effort to attack Bitcoin? Again, Trump doesn't control these he does control these agencies under the executive branch, but he's not active on a day-to-day participation of DEA, FBI, et cetera. So I think for these have been long-running processes that are finally manifesting at the SEC. And I think the Bank Secrecy Act is what they used to charge the guys over at BitMEX. I think they're taking a more rigorous stance against these exchanges. But what's kind of crazy is BitMEX is still up.
Mm-hmm. Yeah. They're still up because they don't operate in the United States, quote unquote. So and you can also look at Binance too with that whole Tai Chi document leak. They also don't operate in the U.S. And that's an interesting thing here. When we're talking about crypto exchanges, and we're talking about accessing this new world financial institutions. So historically, if you wanted to go be part of a bank, you had to go to the bank. You had to be geographically close to that bank. Nowadays, with the crypto exchanges all online, the geographical presence isn't no geographical presence really, and it's not really so important for the user. For the regulation, it is. For the user, it's not. And we're seeing that across the board. So I know with Kraken, historically, U.S. focused, but you guys have been making global moves. You guys launched in Japan. I think pretty recently. What are some of the challenges of trying to grow internationally, especially in a new technology that is, finding its footing, as well as having to deal with the unique regulations that every country has?
Yeah, we at Kraken very much adhere to whatever local regulations exist. We are one of the few exchanges out there that do adhere to these regulations on a state by state level in terms of like states of like countries.
Mhm.
So we're very much focused on that. In addition, I think like Jesse has a very principled stance that we're going to do our best job doing X, Y, and Z to go bring Bitcoin to the masses. I mean, that's what our objective is here, is bring Bitcoin and crypto to the masses. And I think the way that we approach it is making sure that we've got all the regulations in place, that we're doing everything proper. And then as well, we have in some countries, for example, in Japan and Australia, we've got general managers who understand the local region much more so than folks at HQ might. So these, of course, these are still employed by Kraken, but they are more regional kind of like heads that understand those regions. So I think that enables us to be more empathetic with the local culture, language, business needs of those customers.
Mhm. And another recent development at Kraken that you guys are trying to do to help with growth. You guys released a new mobile app. What is unique to the mobile app? Is there new features? Is it just prettier, nicer design? What should users expect?
Yeah, so Kraken has kind of been we've been a slow kind of quiet beast out there. We haven't pushed out tons of new features over the last year or two, but we've been quietly building this new mobile product for the everyday trader. So Kraken has been a little bit more advanced. Our interface is a little bit trickier to use. We are one of those liquid venues out there. We get features like margin trading and staking that are really popular, but we haven't been the most easy to use interface. That was the focus of this mobile product. We wanted to be empathetic towards the everyday customers. They could come in, download the Kraken app, and immediately go buy Bitcoin using a variety of different payment methods. So we've, in addition to new payment methods, for example, like credit cards, it also enables folks to sign up and buy Bitcoin on their phone. And we think that is a huge step forward in terms of the usability of Kraken. So for us, this isn't going to be something totally different than other folks in the market. It's just a mobile first and easier to use version of Kraken.
And this next question isn't directed necessarily at Kraken, but at crypto exchanges overall. But if you want to speak specifically on Kraken, you can as well. I know personally, as a crypto user, the big fees really are when you're taking the money off the exchange. Trading within the exchange, all the exchanges pretty much have pretty reasonable fees, but like we mentioned now, with the growing desire and the growing availability of different financial products, like lending, like borrowing, insurance. I mean, whether CeFi or DeFi, there are tons of new products out there. And a big issue I know for me, when I want to start trying out these products, using these products, putting my crypto to work, the issue is, as of right now, I have to actually take that crypto off the platform, off Kraken or off any other exchange that it may be. Is Kraken or just any exchange, crypto exchange, are they really considering saying, hey, there clearly is a desire for these products in the market, about kind of offering these in-house, whether they be lending, borrowing, or any other of these new financial products?
Yeah, lending and borrowing, I think, is top of mind. With the Kraken Bank, our Wyoming SBDI license, that gives us access. Basically, we become a U.S. bank, which is really cool. That gives us the ability to go launch lending and borrowing much more easily, where we fall under different regulations than a traditional lending and borrowing company that is built on top of another bank. So definitely top of mind for us. We definitely see the need for lending and borrowing products. They're very popular. I think there's other cool things, that we can do as well. Other financial instruments that we could offer. We also can do like full reserve banking. So the bank will be full reserve, which I think is attractive for a lot of people, even with their dollars. You do have to pay. Unfortunately, our fiat world, we still got to pay for things in fiat. So, and if someone's really concerned, if they're libertarian, they're concerned about their bank, the Kraken Bank will be full reserve, which is super unique. And that's what the Wyoming regulators crafted. So I think, I think this enables us to do a lot more of those things. We're definitely want to be that full stack suite of different products and services. We're kind of seeing, it's interesting, I've been around the space for 8 years, and like it's interesting to see how, we've got the exchanges, and so you can buy and sell crypto, Kraken, Bitstamp, Coinbase, etc. But now you've got like lending and borrowing, and so folks like BlockFi started there, but now they offer brokerage, so they offer buying and selling crypto. So exchanges are also veering into that space as well. I call these like Bitcoin banks. So that's what I think these are becoming, are kind of Bitcoin banks where it's lending, borrowing, trading, potentially other things as well. Who knows? They might loop in tax or white glove services, or then you're going to have options and futures, so other financial instruments. So I see all of them kind of competing in that space over time. In addition, you've got the explosion of different places to buy Bitcoin on a brokerage level. Brokerage means that they're not an exchange themselves. They go source the coins from companies like Kraken. So an example of that's like Cash App or Robinhood. They're brokerages. So the explosion of brokerages, I think, will be huge as well. I'm not sure I don't think they're really going to edge in on this lending and borrowing space, though. I think that'll be a predominantly an activity that's only done on these exchanges or these lending and borrowing platforms.
Mm-hmm. Yeah, and connected to that, we're talking about brokerages. We have to mention PayPal, which some say gave the real big push for this latest bull run, even though users don't actually hold their keys, they can't withdraw, they can't. But the idea, the hope being that this one gets people exposure to cryptocurrencies and gets them used to trading them, as well as hopefully down the road they do enable the onboard, offboard. But unfortunately, we don't really have time to talk about that as our time's running out. So last question before I let you go, because I know that you are very busy. I want to hear your Bitcoin price prediction, not trading advice, and your own personal, obviously you're not speaking for any company, your personal price prediction for Bitcoin. Where do you see the top of this bull market?
Always a fun question to ask. Bitcoin has been made and purpose built for this moment. It has waited this whole time for a moment when people start to lose faith in their own fiat currency, their government currency. That moment is happening now. And that moment is happening when billions of people will see Bitcoin's value, and hundreds of trillions of dollars of value will see that. So what is the top price of Bitcoin in the cycle? If you use historical charts, if you use stock to flow, which is an analysis done by 100 million USD, that's his Twitter handle, we see ranges between 100,000 and 300,000. Also, I think that's pretty reasonable considering the macro background and demand and historical cycles. We could see something like a super cycle where that goes up to like 1 million, which no one is expecting, which is also why I kind of like it. Markets typically don't move, and markets typically don't do what we all expect it will do.
Yeah.
And so I think like up to 1 million isn't off the table, because you have literally the moment Bitcoin was built for. Like that was this moment. Do I think that's likely? No. even 100,000 to 300,000, who knows what the likelihood of this is? If we use historical patterns, if we look at the macro backdrop and demand, I personally believe it's likely, and I put my wealth there. And on that bet, if I'm wrong, then I lose money. If I'm right, then we'll make money. But yeah, I think we could see between like 250,000 and 1 million in this round would be my bigger banded range of probabilistic outcomes.
Mm-hmm. And when do you think that will hit? How long do you think it will take to get there?
Historically, using historical data and given traditional cycle length, we're looking at December 2021. Who knows? It could take 3 more years. It could be never. So, again, if you don't trade on this advice, I would definitely consult your own trusted people that you'd like to talk to, learn more about Bitcoin. And then if you feel so inclined, then join us all for the bull run.
Mm-hmm. And if you want to know an exchange where it is available to buy cryptocurrencies, that is Kraken Exchange. Dan Held, thank you so much for joining us and giving us your insights. Always a pleasure speaking to you. And for all of our viewers here at Reimagine 2020, I'm Yonah Hochhauser. Thanks for watching.